A rough week for the banking industry.
The collapse of Silicon Valley Bank.
The second biggest bank collapse in U.S. history.
SVB was established in 1983 in Santa Clara, California, United States, and it was the epicenter of tech startups. Bank gave loans to venture capital, VC or PE firms. These firms would then invest in startups. By 2015, the bank had expanded so much, it was reported that 65% of all startups in America were served by this bank, and the value of its total assets was around $200 billion. Bank problems started after Ukraine-Russia war. As with war, inflation started to creep up, and Fed started to become uncomfortable with the inflation and the quantitative easing that fueled US economy during COVID-19 pandemic. SVB had a simple functioning mechanism: take deposits from clients and invest them in generally safe securities like bonds. But due to Fed actions to fight inflation and trim down their balance sheet, they started to increase interest rates. With increased rates, low interest rate bond held by SVB became worthless. Also, problem was magnified because there was slowdown in venture capital and tech more broadly, deposit inflows slowed, and clients started withdrawing their money. On 8th March, SVB's parent company, SVB Financial Group, said it would undertake a $2.25 billion share sale after selling $21 billion of securities from its portfolio at a nearly $2 billion loss. The move was meant to improve its balance sheet. Instead, it spooked markets and clients. The share price of SVB Financial plunged on Thursday. By Friday morning, trading of the stock was halted, and there was reporting SVB was in talks to sell. Big name VCs such as Peter Thiel and Union Square Ventures reportedly started to tell their companies to pull their money out of the bank while they could. People started freaking out, and unfortunately, by about midday Friday, regulators shut down the bank. On Friday, 10th March, banking regulators shut down Silicon Valley Bank after the bank suffered a sudden, swift collapse, marking the second largest bank failure in US history. On Sunday, 12th March, the federal government said it would step in to make sure all of the bank's depositors would have access to their funds by Monday, 13th March. Regulators also shuttered another bank, Signature Bank of New York, which had gotten into crypto, and the federal government said its depositors' money would be guaranteed as well. Now, let's talk about the impact of its failure. It is now problematic for startups because, unlike big companies, most startups do not have multiple bank accounts. They use a single bank account. They are very critical of their money because they have to pay to their employees and bear the operational costs to run the startups. They are in dire need of funds. Paytm founder Vijay Shekhar Sharma reveals how SVB was among his first investors. The bank was one of the first investors of Paytm. They had earned a huge return on their investment of $1.7 billion. Though it is safe to say that it is not a systematic issue yet and seems to contain within a couple of US banks, and we cannot still compare this crisis with 2008. What is now to look for is how European banks are functioning with same concerns developing over Credit Suisse, as any bad news on Credit Suisse may have the potential to become a systematic problem in Eurozone and could impact the world. Even Germany's DB shares slided on 24th March by 14% at a given point in time and recovered by a net down to 8%. Major fear among the market seems to be continuity in hiking Fed rates while keeping it too low since 2008. Since inflation is still on the rampant side, central banks should continue to raise rates, as said by Nagel, president of Germany's Bundesbank. Regarding SVB, its impact on American and global economy is yet to be seen. For more such videos, please like, share, comment and subscribe to our YouTube channel. Thank you.